Our next panel will answer the question every business leader and entrepreneur is asking. Where's the money? Where's the money?
Thank you so much, Heidi. I'm so excited to be here. My name is Monica Villalobos, and I serve as President and CEO of your Arizona Hispanic Chamber of Commerce. And I'm joined today by a wonderful panel. I really want to thank the Phoenix Sister Cities group for convening this conference on this important topic. As Heidi said, where is the money? This session is on the finances around trade. We know that 15% of Phoenix businesses trade internationally, and 40% of that is with Mexico. It should be more so that Phoenix can be that global hub of business. And today we have subject matter experts to discuss that very important topic. I will ask the panel to introduce themselves, and I'll start with Tom.
Yeah, hi, I'm Tom Doherty. I'm with CIBC Bank, heading up their business banking efforts in the U.S., the small business banking group for the U.S.
Great, thank you so much, Tom. Jorge. Can you hear us, Jorge? Okay, we'll get his audio fixed up. Let's move to Michael.
I'm Michael Poynton. I'm the manager of our business center in Calgary for the Business Development Bank of Canada. We're a Canadian entrepreneur bank that works well with helping entrepreneurs go overseas as well.
Oh, fantastic. Thank you so much for joining us, Michael. David.
Thank you, Monica. David Adame. I'm the president and CEO of Chicanos for Causa. I'm hearing some music. All right. A 52-year-old community development corporation. Our designation as a U.S. Treasury Community Development Financial Institution is why I'm here today. Thank you.
Thank you so much, David, and welcome to our panel. Jorge, are we good on audio now?
Yes, I'm here. Thank you very much. I'm very pleased to be here.
Please introduce yourself.
Yes, thank you very much. I'm at HSBC. I'm the country sales head for Global Trade and Receivables Finance. It's all the credit related to short-term transactions.
Wonderful. Thank you so much, Jorge, and welcome to you too. To our audience, please ask questions in the chat box. We will address those toward the end of our session. As you can see, we already have the answer. Where is the money? It is on this panel, and these panelists are going to tell you exactly how to get to that money and be able to trade internationally. Many businesses think that it's very complicated to trade internationally, and they are most intimidated by the banking requirements. You are all experts on this panel. Can you break it down for us and share what is the most important thing for businesses to know, whether it's business formation, collateral, credit, ID, all of those things play into this. What can you tell us about doing business in your marketplace from a finance standpoint? Who would like to start? Oh, you're going to make me call on you, aren't you?
If you let me start with this, I would like to highlight some initial recommendations for Mexican market. When you are talking about commercial banking here in Mexico, you have to be aware that banks are willing to have a business relationship with their clients, a comprehensive business relationship, not just a credit business relationship. So with that regard, it's not only about the credit guarantee. You have to have a good relation with the bank. And the first recommendation is make sure to be attended by the right segment, because banks in Mexico have two different bankings, the retail banking and the wholesale banking. So first of all, be aware that you have to be attended by the right banking. Then in the wholesale banking, there are different segments. There are segments for small, medium enterprises. There are segments for large corporates, and then a global banking segment. So also within wholesale banking, you need to be attended by the right segment. This way, you will be attended in the more efficient way according to your size, with the products designed, credit products designed for your size and for your needs. That's my first recommendation, to be aware of that.
Yeah, that's very important, Jorge. Talking to the right person, right? And making sure that
Exactly.
this is the person that can meet your needs. What about up in Canada? What do we know about the banking requirements in Canada?
Yeah, absolutely. When we look at companies that are looking to go overseas, we obviously look first at their domestic operations, see how well they're planning that way. And then a big aspect of it will be the plan. Why are they going? Where are they going? And what's the forecasted growth in that market? And then how we can support it. Usually we would lever up domestic aspects first, collateral, security, cash flow, because it's proven already. And then we would help them move. We can finance property and equipment in the United States as well, from Canada through our institution. We can't do Mexico as of yet, but right now we can finance in the States. So that is a big help for a lot of our companies we see going over, especially being in the heart of oil and gas here. So we definitely look at the existing operation credit and then the plan for moving forward. And is it the right location to get into? And how do you bring it forward?
Okay, and
Yeah,
that
I think
assumes that those businesses are in their in their country of origin, right? That when you're looking at that, you're looking at that business where they're at currently before they come to Canada.
Or if they're in Canada, before they go overseas as well. Yeah, we look at both.
Great, Tom.
Yeah, I was going to say, I think what Jorge said initially, the structure in Mexico and finding the right home for your business, and I know for us, whether it's our Canadian parent, or in the U.S., that's critical, is because banks will segment their business clients into different groups by size, by credit need, et cetera. So if what we might call a micro business, call it $1 million or under in revenue, or a credit need up to say $100,000 or $200,000, may be serviced by the retail side of the bank versus kind of a middle, we call metropolitan or mid-sized company, maybe 1 or 2 million up to 30, 40 million revenue size versus the large corporate side. Sometimes a level of expertise and service there and it grows based on the size of the company. Many times a smaller micro business is served in the retail side, like I said, or they find solutions. I know we talked about like online banking or some of the fintech, financial technology companies that lend money online, et cetera. There's that many times the startups or newer companies are going there, or the very small ones, and you just need to be very careful in that space because of the way the interest rates are charged, the repayment is done, et cetera. But a dedicated person generally starts, at least in our world and the Canadian side, as you get into that kind of $1, $2, $3+ million revenue size business where you're going to have more of a dedicated person, relationship banker on your accounts.
Sure, and that makes sense. Tom, what about collateral? And are you able to use collateral from one country into another?
So here's where it gets a little more sticky, and I can't speak to like Michael said, I can't speak to the Mexico side of things. I know between Canada and the U.S. where we have operations. There's again, I think it's who the bank you're dealing with, because we have a Canadian affiliate. We've learned how to handle that situation. I think if you go to sometimes, and this isn't a knock on the community or local banks, they may not have that experience or know how to do that to secure a lien in Canada, for example. It can be done, but the laws are different. So, for example, for a request that we would go through an attorney in Canada that we partner with, in the U.S., for example, to file collateral, we would use a UCC lien law. That's different. In Canada, it's a little bit different. They use called a PPSA in parts of Canada, but Quebec has its own unique called a civil code of how you perfect liens, et cetera. So having someone who knows how to navigate that, and from our experience so far, it's again based on the size of credit. We would use an attorney from Canada if we're going to be taking liens on Canadian collateral. It can be done, which is, I think many people think it can't be done, but it can be done You just need the help and guidance of how to go about securing your lien properly. But at least between the U.S. and Canada, the lien laws are actually very similar. It's just the format and the way you secure the lien is a little bit different, but it can be done.
Wonderful. Thank you so much, Tom. David, what about right here? We're based in Phoenix and you've got CPLC Préstamos. I know you do a lot of different kinds of lending. When it comes to being able to help companies that are coming from either Calgary, Canada, or Hermosillo in Mexico, how are you all dealing with those requests?
No, absolutely. And Chicanos for la Causa, we actually have a person stationed in Vancouver, Canada. So we got a flag up in Canada, and we also have staff down in Mexico. But I think what makes us unique, and again, we're a U.S. Treasury Community Development Financial Institution. And one of the unique things about us is that we have a technical assistance team. So when we're working with these companies, whether it's from Canada or Mexico, we're providing that additional assistance, right? What was just described. And who's the right realty person to be talking to? Who's the right lawyer to be talking to? And then making sure that they're being treated fairly, quite frankly. We want to make sure that we provide them the warmest experience, work with them, and also provide access to capital. We're not the banks like the banks on the thing, but we do have capital. And I'll give you an example. There was a company from Mexico, from the state of Querétaro. Uh, they were already doing business in the United States. They were a plastics manufacturing company, and they wanted to expand because their plant in Querétaro was a capacity for their Mexico obligations, and they had great opportunities here. So we lent them some money, about $1 million, and it wasn't everything they needed, of course, but it was enough to create the relationship with the idea that beyond providing the loan, we'd help them navigate and finding a site. The long story short of that, it's a very successful business. They're in our West Valley of the city of Phoenix, one of my great cities that I live in. And they're actually doing a second plant now in Columbus, Georgia, with a third plant being planned for San Antonio, Texas. So we're continuing to work with them, but at the same time, it's helping with that translation, not only just the language, but even the accounting standards, right? You have to do some translations on the accounting standards to make sure that we're talking apples to apples when you're looking at the financials. And then we get into all the perfection of collateral and guarantees. And again, there's ways to do that, but you got to make sure you have the right people on your team following that. But it can be done, and we're excited. This company in Phoenix is already opening up their third manufacturing line, and already have close to 75 people working and planning to add more. So it's a great opportunity to really expand economies here in the United States.
Oh, that's fantastic, David. I know you all are doing great work. And that was going to be one of my next questions. Is it possible with all of your institutions to have one banking partner in all three countries? How do you manage that? Is that a possibility, or do they have to be all managed separately?
I know for our institution, it would be managed separately. And we're also a little bit different. We're a complementary lender in the marketplace. So you still have to have what in Canada, the big five banks or a local credit union. So CIBC would be a partner with us with a lot of our customers. So we leverage with CIBC to help our customers. We do more hard assets, working capital, cash flow side of things. But we don't have another institution in the States that there's a preferred or that we deal with there. So you'd have a separate relationship within the US or Mexico, not with our institution all the way through.
Well, now you have David at
Yes.
CPLC, so you two should talk.
Absolutely.
Jorge?
Yeah, from HSBC standpoint, yes, we can do that. We have a specific segment in our banking that is international subsidiary banking. So yes, we can have a company whose parent company is located in the US or Canada, and through that company we can support here a subsidiary in Mexico, or or the other way around. No, so Mexican parent companies that will have a subsidiary in the United States or Canada, and from here we can support locally with support from the parent company in Mexico. They can get support from Canada and US.
Great, excellent. Thank you so much. And in terms of, go ahead, David.
No, I was going to say, the other thing beyond managing the banking thing, I think the other thing is connecting to, for example, with the example I gave earlier with the company from Querétaro. The thing about us being a lender and working with some of the banks here on the panel with me is that we can also provide other services that are critical, whether it's workforce development or helping employees with other needs they have, finding housing, right? Because as you know, across the United States, there's a shortage of housing right now, no matter whether it's market rate housing or affordable housing. So those are the type of things we all need to think about when we're putting these and recruiting these companies into our market, that there's these other needs that need to be addressed as well in order for the company to be successful with their employees are going to need.
Yeah, no, absolutely. And I know we're going to talk a little bit more about that as we go through this session. But before we leave this section, I really want to talk a little bit about sort of online lenders. How do you all feel about that? What are the risks and rewards of borrowing money from online lenders?
Well, it's I guess it's a growing industry, obviously, but I think there's a place for it.
Mm-hmm.
As I mentioned before, and I think we probably would agree that it's generally used on the smaller, potentially startups or smaller companies who don't have a dedicated relationship banker at a bank, and there's nothing wrong with that. It's my only advice would be just to read the terms and conditions very carefully as you do that. For example, many times the repayment terms, where a bank might set up a line of credit with interest-only payments monthly on that line of credit, it may mature in a year or two. Some of the fintech lenders might have much more aggressive repayment terms on it, either weekly kind of repayment that has to come in from your cash flow or from your merchant collections. So there's absolutely a place for it, because a lot of the underwriting is based more on. So a commercial bank is going to underwrite, I always say, on three things: cash flow, historical cash flow first, a demonstrated ability to repay; collateral as a secondary repayment source; and then the third would be the guarantor support, where an online lender is not going to go into maybe as in-depth of analysis on the cash flow and collateral. They're going to look at that owner. They might look at the FICO, the credit score of that owner, to set a credit limit up to $100,000, $200,000, et cetera. So it's a different kind of underwriting in many cases, but there's absolutely a place for it. It's just a unique model, that's all.
Right,
Exactly.
sure.
And now that you talk about the underwriting process, it's you have to be aware of that the commercial banks do look after that. Though, first of all, the cash flow, the payment ability that they have. The collateral is always our second way out. We are not relying on collateral to lend. So in that case, and in this topic, a part of the underwriting scheme from the commercial banks, I will recommend that you will look for financial solutions, not credit lines. So sometimes there are products out there that you don't need a credit line in place to get liquidity. For instance, reverse factoring or discounting of a commercial letter of credit. So that's why you have to be attended by the right person, extern your needs, your concerns, how your working capital analyze your working capital needs, see if you have something here that you can take advantage without having in place a credit line. And if not, you can be able to have a further analyze and see what kind of credit line you will need. So I would recommend that. Look for a lender that is offering financial solutions, not just credit lines.
Yeah,
Sure.
that's actually a great point, Jorge, because you think about manage the asset to the liability. In other words, if a lot of times a credit line is offered by online lenders, for example, that solves everything. If you're buying equipment or something else, you don't necessarily want a line of credit. You want a term loan that matches the length of the note to the length of what you're buying with the asset. So, and factoring, as Jorge mentioned, there's a lot of different solutions out there. It's just having the right relationship person that can guide you through those, or partnerships, with people like certified development corporations, like we're talking about with David, et cetera. There's a lot of, we should be able to direct you to the right source after we get to understand your business a little bit better.
Right,
Monica,
and it sounds like it's all very customized.
Monica, I was going to say I'm an old school. I grew up through a Chase Bank system, commercial bank lender, but I know everybody's trying to get to this automated online, and it could serve a purpose on some unique, but unlike the rest of my colleagues on this panel, relationships is all about everything, right? They're going to understand your business during good times and bad times. When you need a PPP loan, when you need all these other things, having that relationship, there's nothing better than that because they understand your business and can better analyze you when you do need to go to them for whether it is a term loan or a line of credit and those type of situations.
Well, and I think we saw during the pandemic that your banker, as a business owner, your banker becomes your very best friend, right? All of a sudden, they're the most important person in the room to make sure that your business stays afloat. I want to remind the audience that we will be answering questions from the audience. So if you'd like to put those in the chat box or get those ready, we will address those toward the end of the session. So for my panelists, it sounds like you're doing a lot of hand-holding, a lot of customization to get international businesses to trade in your respective countries. What other services do you offer to help companies set up in your marketplace? David mentioned a few already, whether it's housing, whether it's marketing, whether it's preparing financial statements in the way that you need them. What about purchasing transactions? What are those additional ancillary benefits that you offer your customers?
Yeah, and a big thing I think, as everybody has mentioned, is relationships. But another part of that is using our relationships, because our necessarily help you find a property. Will help you find a realtor that will help you find a property. So we'll introduce you to our breadth of network within the local area to help you hit all those ancillary aspects. Right, because for property taxes, accounting rules, we'll introduce you to the accountant because that's not our expertise, but we'll make sure you're in with someone local and very promising and has done great work for our clients. So you can use our network with us, and that's where we find the value add of the relationship side, is that we can really introduce you to a breadth of experience in the local market.
Mm-hmm. Great.
Monica,
Other
I'll say that,
benefits?
yeah, one thing that people may forget is just navigating sometimes the public policy or politics, if you want to put it in those terms, understanding, zoning, understanding all these other things that when they're looking for a location, besides just working with the realtor, I think that's important. I also think understanding where if this business is going to have employees with a lot of families, where are the good schools, because everybody wants to send their kids, to a quality school where it's located. So all those types of things in the whole environment that these employees are going to be working. Because in my book, it's always been employees are your most important asset in any company, and as they go, you go. And so all those types of services to keep in mind is what we also try to help out with.
Yeah, I
The
think
other
that's a
thing,
great, we think of companies as just one entity, and sometimes we forget that they come with employees who come with families, and they need a lot of other services beyond just, the banking. So that's really helpful. Tom, what were you going to say?
yeah, the other thing that's relative to this conference, I think, is that, knowing we see a lot from a foreign exchange perspective. So a lot of times our clients, if they're buying their supplies in China or somewhere in a foreign currency, should they be buying it in U.S. dollars or setting up with a foreign exchange product that allows them to maybe get a better deal if they're purchasing in the currency of the other country, and having a foreign exchange specialist help them through that can be a big savings in that. Other things like mergers and acquisition financing, if they want to grow in the U.S. or in another country there's government guarantee programs like the SBA or others that you can help them through to be able to grow their business through non-organic ways like acquisition financing, things like that.
Sure, that makes sense. And one of the things that we find is that Canadian companies just doing business in the US need a deposit account when they sell through, say, Amazon or PayPal. I understand that they won't send funds to Canada. So these businesses have to open an account in the US and use wires to send funds back to the main account. Can we kind of compare markets? Is that also true for Mexico? And these are, it could be smaller businesses that aren't set up as a brick and mortar necessarily here, but they are selling a great deal of products here.
Yeah, I mean, I
Any
can't
thoughts
speak to
on
that
that?
on the Mexico side, but you're right, Monica. I think that what we generally see with, at least for Canadian companies doing business in the U.S., there's two scenarios usually that comes up. You mentioned they may not have a subsidiary here in the U.S. or a U.S. entity, but you're right. If they're collecting money through Amazon or PayPal, they need a U.S. based account, so then they can use wires going to back to Canada, for example. So being able to help them with that, or if they have a subsidiary in the U.S., they would want to set up an ACH type of product because they want to collect their payments or pay their bills, electric bills, utilities, taxes, whatnot. So there's kind of two different scenarios at work there, and I think looking for a bank or a product that can do that, open up an account for a Canadian company, for example, and what documentation is needed, but B, the product, is it kind of a bundled product of a flat monthly fee that allows so many wires or ACHs to happen without nickel and diming you for every single one that you're doing is kind of important to shop that around quite a bit. So there's different scenarios that work there, at least between the U.S. and Canada. Those are the two scenarios we see quite a bit. You hit on the one with PayPal or Amazon. That's a big one for companies.
Yeah, and those wires can be very costly, I imagine. They add up, so it's important to have someone that can help guide. Um, from an ACH standpoint or electronic transfers to pay vendors and taxes and utilities, what is the best way for businesses to shop for those services? Jorge, in
I would,
Mexico, what's the best way to kind of look for those services?
Like, sorry, I have to understand more this question. It's like paying some suppliers in abroad.
Like electronic, yes, electronic transfers to pay maybe vendors or taxes, things like that. What's the best way to look for those tools?
Well, in the bank we have a cash management solution that is overseas, that has a support overseas. So you can have accounts in Mexico and accounts in the United States, and you can wire from Mexico to United States through that cash management platform. That's the way I would recommend
Right.
to do that. No.
yeah, it's an
Excellent.
online
Oh,
banking
that's great.
solution, Monica. You're looking for an online banking solution, like Jorge said, that through cash management, like an ACH module for us, I think it's $25 a month gives you 50 ACH transactions, and everyone after that is $1 or something like that. So if they can bundle it together, you have to shop it around. Different banks have a lot of different solutions for that.
And does
Yeah,
the
and
business
there,
formation, oh, I'm sorry, Jorge, go ahead.
no, there's another. For instance, if you are paying a supplier in abroad, and you are getting financing for that payment, there are platforms also that give you that financing here in Mexico, and they will pay abroad to the supplier. So, and without any cost. No, so that's why you need to analyze the entire cash flow and the entire need to see if you can use a cash management platform just for paying, or you are going to need financing for that payment and then send that payment abroad.
Right, right. And so what I'm hearing is it's important to know sort of the full suite of products and how they will service you rather than just looking at one thing, because what they may charge you in, say, wires, they may make up for in relationships and networking and introducing you to potential buyers. So I think that's really key. One of the things that I wanted to ask, especially as it relates to banking, is does the formation of the business matter? So here in the US, we have LLCs, we have S Corps, we have lots of different designations. From a banking standpoint in your respective countries, is that important? How important is it? Is one easier than the other to manage? Can you share a little bit about that, Michael?
Yeah, we have different rules and formations compared to the U.S. on our corporate side. So you would get with a local lawyer and accountant to build your Canadian corp a certain way. But to us, in the end of the day, if it's a partnership, if it's a limited it's incorporated. It doesn't matter to us on the lending side on that side. If it rolls up into a trust, obviously for trusts we can't take guarantees or anything, but on that side, again, it's whatever the preference of the individual. So for the most part, it doesn't affect our lending overall.
Mm-hmm. Okay. What
Yes,
about
in Mexico is
Jorge
the same.
in Mexico? Is the
In
same?
Mexico is the same. There are different kind of incorporation figures. For instance, there are a corporation that in Mexico calls Sociedad Anónima, but also there's a civil corporation, Sociedad Civil, here in Mexico. So we can grant any credit facility to different kind of incorporation figures.
Mm-hmm. Great, excellent. And David, here in the U.S., I know one of the things that we saw during the PPP distributions was that many companies were sole proprietors and just had 1099s as their contractors or employees. And so they weren't eligible for PPP. I think that was fixed with the second round. But in terms of general lending, does that formation designation make a difference?
No, it's similar to what was mentioned earlier. Yeah, in fact, the PPP, between the two rounds, we've done like 2,300 loans, about $64 million in total. And it's been to the smaller, especially now that when they made that adjustment to help sole proprietors and other types of structures be eligible for it. That really opened up the door for many more companies. So it was really beneficial and effective at making that. But because of your question, though, no, we're flexible when it comes to the structure.
Great, great, excellent. And I want to remind the audience to keep those questions coming. We will be addressing those a little bit later in the session, but really want to make sure that you all are getting the information that you need and want. For my panelists, what other, I'm sorry, go ahead.
Monica, I think I'd be remiss to say that when it comes to the PPP loans, right, whether it's international or not, I think the key thing is making sure you stay in compliance so that you do have that forgiven, right? If you're eligible, but make sure you're doing all the compliance, because the last thing you want is at the end of the day to run into a technicality where it's not a forgiven loan. And so that's where our organization, Principal Council, works with our borrowers to do that. And I'm sure the other banks do as well that have participated in that. But you got to be careful. That's where the relationship comes in again, that you know what the rules are so that you can take advantage of the full benefit of the program.
Right, and very early on, those rules were changing minute by minute, and I know that gave all of our banking partners a bit of a challenge, but you all figured it out, and when they brought in the CDFIs that had those relationships, that was really a saving grace for our most vulnerable businesses, I think. What about other considerations? What other considerations are there for international companies? For instance, do foreign companies established in the U.S. qualify for PPP loans? What about women and minority-owned businesses? You know, in the U.S., there is a very large push around supplier diversity and making sure that those businesses that come from vulnerable communities have the banking relationship so that they can do business and they can gain those big contracts. So what are those other considerations when doing business in your particular country? But I'll start off with David. Do foreign companies that are established in the U.S. qualify for PPP loans?
The short answer is yes. And I'll give an example. There was a large restaurant chain out of Mexico that expanded into Arizona. The name of it's Comics, like comics in English. Great restaurant. If you look them up, if you haven't gone there, it's good for the kids. A superhero type of restaurant. But we recently closed a large PPP loan to them, and it's a Mexico-based company, but they have a U.S. operation company established here, so they were eligible to get this loan.
I'm going to have to take my kids there. What about the rest of you? What other sort of guarantees or collateral might be required by your bank? And I realize we're only working in examples, and you know the short answer is it depends, right? It depends on the kind of company, it depends on the industry, it depends on a million different things. But sort of in general, what other considerations do your banks look at when they're considering lending?
I would say that yes, I would say that if there's a company, a parent company based in the U.S. and it has a good performance track and banking relation with a renowned bank based in the United States or Canada, and it's moving with a subsidiary in Mexico. I think the best and efficient way to guarantee a credit line here in Mexico is through the issuance of a standby letter of credit. So in that way, a bank in the United States will issue this guarantee in favor of a Mexican bank on behalf of this American parent company, and with that guarantee in place here in in a local Mexican bank, this Mexican will be able to grant a facility to the Mexican subsidiary. And there's always good to look at this efficient solution. It's very quickly to establish, and it could be very efficient to grant a credit facility in a shorter time of period.
Yeah, I think in addition to that, a standby letter of credit, Monica, I think a lot of times we see this a lot where, again, it's from the Canadian side. A Canadian company, well established in Canada, much significant, larger company, will establish a subsidiary in the U.S. that's newer because they wanted to come to expand their market or whatnot, and it's maybe hasn't financially taken off yet. It doesn't have the cash flow that I talked about earlier to justify a loan, but the Canadian company does. So you can take the guarantee of the Canadian company and use their financial performance to support the younger subsidiary in the U.S. so that the bank can lend money to the U.S. subsidiary with the guarantee of the Canadian company behind it. That can be done and allow a younger U.S. subsidiary to be able to start getting credit established, which is a positive.
Right.
Yeah,
so
and a little bit furthermore.
Mm-hmm.
Yeah,
ahead, Michael.
Furthermore, from Tom's perspective too, especially we're the Canadian Development Bank, so we deal mostly with Canadian enterprises. So if they are moving overseas, we could always lever up the Canadian assets to give them cash flow to move into the U.S. first as well, which really helps. And I know one thing that a lot of banks, and depending on the size of the company and the collateral they're giving, that I know entrepreneurs don't always like to talk about is conditional personal guarantees and limited personal guarantees on different financing aspects. So depending on what you're pledging, how aggressive your growth plan is, those might be things that banks will consider from the owners of the company. Even when we deal with international companies coming to Canada, we usually do get the parent guarantee, as Tom was saying, especially on newer ventures within Canada. So those are two big aspects we would look at.
Great. And are partner guarantees a thing too? For instance, if there's a Canadian company that wants to do business in the U.S. and they've partnered in maybe a joint venture with a U.S. company, David, do those companies get more consideration because they have partnered with a U.S. company, and that's sort of the consideration or the co-signer, if you will, if that other company has businesses here?
I think it can help, but we're going to analyze each guarantor. We're going to analyze each business and make the credit decision on the underwriting, whether that's something that we need. If we do need to go to the personal guarantees that was alluded to earlier, but if those companies are strong, the answer would be a short yes. But again, it's one of those depends. It depends on the financial strength of each of the partners involved.
Right. And that's understandable. You all are in such a highly regulated industry in all three countries that I imagine it's difficult to customize and personalize and stay within the bounds of those federal regulations. Before we get to the audience questions, I also want to give you an opportunity to really talk about your particular organization and how it can benefit those that want to trade internationally. So how are your individual banking institutions different than those in your marketplace? Jorge, would you like to start?
Yes, and I would say that we are a bank that, for instance, in the GTRF space, the Global Trade and Receivables Finance, it's our DNA globally. starting from Hong Kong and London. So we have a very, very good credit products to offer, very good financial solutions to offer. And this has been our leading advantage here in Mexican market. So again, there's very important a very important thing to consider is to be to be supported by the right person who can give you the best credit product suitable for your needs.
Great, excellent. And Michael, you said earlier that you're a complementary lending institution. Can you tell us a little bit more about that?
Yeah, so BDC is the Canadian Development Bank. So we're here to support entrepreneurs. So we only lend to entrepreneurs. We don't have a retail bank side. We don't have personal. So we're strictly here for businesses. So we always have a partner with another institution. So locally, we could be CIBC, could be HSBC, or other Canadian institutions on that side. But our bank is big on international growth and just growth of companies. That's really why we're developed as a corporation to be here and support entrepreneurs. So we have our financing products that could do that, be it large cash flow loans to help them expand and grow. But we also, which is unique for a bank, is we have an advisory side. So we do have a consulting side to our bank that will help companies consult on international growth, market selection, where should the next market your company wants to go. How are the laws there? What are the legalities of different things? We can't do the legal work, but we can look into the best fit or best state to go to within the United States as well, if they're looking at U.S. So it gives us a different angle that we can also work on an advisory consulting mandate for them for that growth, as well as helping them finance it.
Sure, that makes sense. And Tom, what about your organization at CIBC? What kind of sets you apart in your marketplace for international businesses?
Yeah, I think it's, with the parent company now and, the cross-border abilities that we have, and at least, for our group to have a dedicated relationship banker. I think we're all talking about that at the certain size company where actually for us, you have a team of 3. Because the biggest thing a lot of times smaller companies complain about, and they should, is turnover of their banker, right? Things change, people change, that each client really gets their relationship manager, as well as a dedicated portfolio manager on the credit side, and a day-to-day client specialist for day-to-day transactions, draws on lines, questions on their checking accounts, and a treasury management person too. So bringing specialists in to be able to help them with their needs, whether it's foreign exchange, introductions to Canada, et cetera, or their daily needs here. And you don't always have all the answers, but you need the team around you, the specialists that you can pull in to be able to help that business. So I think it's kind of a big bank from a product set, but a very small hands-on from a relationship approach is how we try to differentiate.
That makes sense. And it sounds like you use the it takes a village model to make sure that your international business owners are being taken care of. David, what about you? I mean, CPLC has such a rich history, particularly here in Phoenix and across the country. And now with Préstamos, that adds a whole different level of economic empowerment. How do you all set yourselves apart from other organizations, financial organizations here in the Valley?
Yeah, thank you, Monica. I think the biggest thing is just our ability to tailor what the company needs. The flexibility and the structures, right? We may uh, do something very creative in how we structure a loan, right? Whether interest only for the first month and other things that we do just to make sure that we understand what the project is or the business expansion. And we try to be as flexible as possible to make sure that it works for the borrower and our new partner. I think the technical assistance we clearly do that and we have an SBA contract to make sure that we're doing that. For marketing, we've even the example here in Phoenix with the new light rail going in, business getting impacted by that. We went in and helped this company that didn't have more of a social media platform and advertising because they were so used to they're old school, right? They just depended on people walking into their store. But with this construction going on the light rail, it makes it very hard to get to their store. So they needed to expand and get a internet site and everything set up. So things that might seem simple, but to some small businesses that are maybe a few handful of employees, they can't take the time to do that. So that differentiates. And then the added benefits, right? Whether it's workforce, housing, immigration, those are the types of things. I know there was a company that my friend Glenn Williamson, who's the honorary counsel for Arizona for Canada, he was telling me there was a company out of Canada, a technology company, expanded into Tucson. They needed engineers. Could only find half of the engineers that they were looking for, so they had to go into Mexico to get the other half. So we're talking about HB1 visas and immigration type support on that thing. And then the last thing I'll say is equity, because what happens with us, and our goal is to graduate our customers into, to my colleagues' banks that are on the panel here with me. So in some cases, we'll say we'll provide an equity investment as well if we're really comfortable with it. And that example I gave earlier with the manufacturing company, we had an option to convert some of that $1 million loan into equity. It's a very passive piece, and we don't get into business, but it was a way to make sure that we continue to have the relationships where we could provide the technical assistance. And we knew that once we did the heavy lifting of all the translations from language to financial, that one of the local banks would come in and want to take over the relationship. And that's what happened. And we're all excited about that. But that's a differentiator on how we serve our constituency.
Thank you so much, David. That's really helpful. Oftentimes I tell businesses, I'll ask them, who's the most important person or who are the most important people in your business? And, they always have different answers. Oh, I am because I'm the owner, or my employees, or my manager. And, we always go back to it's your banker, your accountant, and your lawyer. Those are going to be the people that keep you out of trouble, right? And so I think, one of the things that we've learned today is that making sure that you have that relationship and the ability to ask those questions, right? You have to have a good relationship with your banking institution to make sure that they're giving you what you need so that you can grow your business ultimately. We're going to open it up for questions at this time. I'll ask the facilitator to join us and let us know if there are any questions from our audience.
Hi, yes, and thank you, Monica. This is Emily Smolensky. I'll be moderating the Q&A today. Our first question to the panelists: what would you say to those small and mid-sized firms who may be hesitant about pursuing financing to engage in cross-border trade for the first time after the pandemic?
Yeah, I guess a big thing would be for that is develop your plan and make sure you have something good going in up front. Like really look at where you want to go, why there, what the benefit to the company is, so that when you go to your business partner, your financial partner, that you have everything kind of set up nicely so that when you talk to them, they can give you good advice and use the relationship. And maybe you don't end up doing it, or you don't feel comfortable doing it, but having the conversations and starting the conversations is always key up front.
Yes, in that regard, yes, the start conversations with your banker. If you have a banking relationship, start conversations with him. And because there are products that not only give liquidity or funding or risk rate facility, there are products that also mitigate inherent risks related to trading, to foreign trading. No, for instance, country risks, commercial risk abroad, that will facilitate your risk perception of a certain destination or origin of goods.
Yeah, I would do some research on, because there's so many things to consider, but I'll just point out one. Is there a possibility that your business is located in a foreign trade zone where you're at? I think that could provide some tax benefits that you wouldn't want to miss out on if you're able to structure that correctly.
And there's resources out there that stopping in a local branch. Again, I think the point was made earlier. Know what you think you're looking for in a banking relationship. Is it foreign exchange? Is it just a deposit product? Is it a loan product? And what size? And find the right person at the bank for the size of your company. And if you're not sure, there are resources out there. And we talked about like CDCs, but also there's SBDCs, small business development corporations, that are many times connected to community colleges that have resources on business plan development. There's online resources like in the U.S. We talk about Small Business Administration. The SBA.gov site is actually a very good site with business plan information and tools to help the small business. So I would say keep asking until you get an audience with the right person that can give you some good guidance.
And I'll just add quickly to that, Tom. That's a great point, is the business planning stuff. So even just our website, since we are for entrepreneurs, bdc.ca has a breadth of information there, from business planning templates to different questions to ask and things to look at. And yeah, it's a focus more on the Canadian side of things, but I think any entrepreneur can use some of those tools.
Sure.
And what would be your advice for a cross-border startup trying to establish a relationship with a financial institution, specifically in the country where you're trying to establish a presence? How can you scale that wall?
Well, if you have a relationship, I'm trying to understand the question, but if you have a relationship in the country of origin if your business is established and you're trying to do business in a new cross-border, the bank or relationship you have where you're at hopefully would be able to help you with some introductions on the other side. Or if not, if it might be a smaller bank that doesn't have those kind of resources, then I would go to one of the banks that have cross-border activities already, and banks in multiple countries that, whether it's a CIBC or HSBC or one of the TD, one of the other banks that has cross-border functions set up already to introduce clients between countries would be a way to go. Or I think some of the banks that are in multiple countries are going to have a little more background on that.
Yeah, I would add to that, and Jorge, you probably can do it better than I can. But B of A, Santander in Mexico, Citibank is Banamex, and so on. So some of the larger banks definitely have an affiliation with Banks Plus in Mexico.
Yes, those banks, we as international banks, we have cross-border capabilities. So be sure of that, and not only cross-border capabilities in terms of products, but in terms of relationships, business relationships with other banks, not only with our branch of banks around the world, but also with other banks. And we have credit lines between banks established and in place, so we can support all the transactions abroad.
And our last question to the panel. So this is about collateral. In your market, can a personal home be used as collateral for a business loan? And what about using business equipment and receivables as collateral?
Yes, in Mexico, it's eligible, whatever of those three. I would recommend first if it's a short-term credit loan and you have receivables to sell or as a collateral, that's the first way to do it. No? And then you can offer, analyze first a co-obligor or an aval here in Mexico, and then a mortgage on a personal home or a lien on a equipment that would be eligible for here in Mexico. But also, I would like to recommend that there are also governmental guarantees in place in Mexico. So if there's a company that is exporting, we have government guarantees in Mexico that we can also explore.
Yeah, and I think in the U.S. it's similar, and I know Canada has similar programs too, I believe, where there are government guarantee programs out there. If you don't have collateral, that the government backs up the loan for the bank at either 75%. Right now, under the CARES Act in the U.S., it's 90% guarantee on those loans. That's for equipment purchases, real estate. But the generic question, separate from a government guarantee, is banks are going to have what they call advance rates on certain types of collateral. So if you have accounts receivable, for example, and you use a line of credit against that, if it's monitored by the bank, they might say they'll lend 80% of your accounts receivable that are under 90 days past due, for example. And they'll look at that monthly on a larger line to see every month you'd fill out a certificate that shows here's my receivables, here's how much I can borrow against it. Equipment, it might be on new equipment 85, 90%. They might ask you to put a little bit down, but if you have equipment already, if the loan is large enough, the bank can appraise the equipment and have a third party go in and give a value against what they call like a liquidation value on that equipment. So just like a house, there's appraisers that'll go in and appraise equipment and things too. I agree with Jorge. Kind of the house might be your kind of last resort. If you don't quite have enough to get there, the bank can absolutely take a second mortgage on a house, et cetera. We're not crazy about the second liens in a lot of cases on houses, because a lot of times it might be a small second mortgage on a house behind a very large first mortgage. And in a liquidation scenario, we'd have to pay off that first mortgage to get to the collateral. So it's there, and it might dress up the deal a little bit, but depending on the amount of the first in front of us, it can change our appetite of how much we want to get into that.
And we do have
and
one
as
more
Tom kind of mentioned, Canada.
Sorry, Michael.
I was saying Canada's very similar. Like we could take the institutions can take a house, your receivables, equipment. Our institution ourselves, we don't touch any personal assets, but I know the other institutions will.
And we do have one last question from the audience. So what's the single biggest mistake small to medium enterprises make in working with their financial institutions?
That's a good one.
We all have answers for this one. Go ahead, Jorge.
I would say that the first mistake they do, and I see it very often, is go to the branches to receive support and not be aware of that banking separation between retail banking and wholesale banking. That would be the first mistake, because they approach the bank to the retail part of the banking platform, and they will have very standardized products, and those products will not address the needs in the most efficient way.
I would say it's just, for me, it's communications, right? I think that's the biggest mistake people make. Whether it's you're in something exciting happening, a new contract that you need additional capital, or a challenge that's happening, right? It's best that you're always in communication with your banker so that you can work together on a solution, especially if it's a challenge. And it's better than not trying to hide something and trying to figure, and it becomes worse. I think when I was a banker, that was what I always told my customers: never hesitate to call me on anything that's going on.
Yeah, I think the biggest thing I've seen in the years of doing this is small, medium enterprise businesses, as opposed to the large corporate businesses where they have a CFO, they have a team around them. Many times a small business owner knows how to run the shop. They know how to manage the floor, et cetera. But when it comes to the books and the finances, and if they don't have a strong accounting partner, not having a business plan, not knowing much about, they know how to run the day to day. But the biggest thing I see is, it's amazing to me always, companies borrowing millions of dollars who don't understand their financial position. They understand what a profit and loss statement looks like, but knowing, to me, what a cash flow forecast looks like is even more important, because a P&L doesn't mean you're generating cash flow. If you're not collecting your money on time, you've got some holes there. And being able to forecast your cash forecasts and balances is one of the biggest things I wish I could get more businesses to understand, because I've seen more companies grow their way out of business than the opposite of not having enough business. If they grow too fast, it can actually put them out of business just as easily as losing business. So,
yeah, I would definitely agree with that point. We see that a lot with the growth, is they're very undercapitalized, and the other thing is knowing your need. what do you want? A lot of times, you get someone come to you and say, here's my financials, what can I get? And it's like, well, that's usually not how it works. What if you know your cash flow? Well, where's going to be your shortfall? How much cash flow do you truly need? Because say, yeah, you can qualify for $1 million, but you only need 300. That's a big cost to you to have. So just truly understanding your need is a big one.
That's usually
Thank
what the
you so
salespeople
much.
say when they come in, right? They'll say, well, I want to give this person $1 million line of credit. You say, well, where'd you get the number? Well, because BMO has a $700,000 line of credit, so I want to give them $1 million. And like, well, that's not the answer. Where's the need?
Right. Well, thank you all so much. Thanks for your questions from the audience. Thank you, Emily, for moderating that Q&A session. I want to thank you for sharing all of your expertise. And I think the one lesson we learned is go take your banker out to lunch, right? They can make a big difference in your business. And all of our panelists are taking reservations for lunch now. So feel free to contact them, reach out, and learn more about how to trade internationally. Thank you again, gentlemen, for being a part of this panel. It has been my pleasure to moderate this conversation. And now back to you, Heidi.
All right, thanks. And I love the line. Yes, relationships. Take your bank representative out to lunch. So we have a lot of options now to find the money. Awesome conversation. All right, thank you to our panelists for this discussion on financing cross-border businesses. I hope you will take advantage of the opportunities to connect with them. I mean, we've got a brain trust of people who have been joining us the last couple of days. Phenomenal information. I've learned so much, and I'm just watching. Remember to visit also the speakers page to connect with everybody directly via email.